we were talking about the timeline of a full cycle. So I'd love to hear like the timeline of the full cycle and then the timeline of the troughs and the peaks again, just so people can really comprehend this.
Yeah. Well, I'll do my best. But so the market, let's sort of run it from what's most sort of common. So you'll get that from the 18-year period. You've got the bottom of the market 2012, and that picks up. Everyone's at that point. They're like, oh, the market's ending. It's just been falling for years, so they've lost hope in it. And like from that 4-year downturn, it's you just think about it from the psyche of a buyer. They're like, oh, prices are discounted in the first year. We can get in. It's 10% cheaper than what someone paid for it last year. It's a bargain. Let's do it. And then they buy it, but then the market still drops and keeps dropping. And then they like get deflated. Like, oh, the property prices, we've been duped. It's the world's ending kind of vibe.
Yeah. So that's the 4 years. That's the 4 years from 2008 to 2012, which would you call the start of a cycle?
I call that the end.
The end. Okay.
From my point of view.
So we're working backwards here.
Yeah. So that was sort of like the end of the cycle. But before that, you got that mania phase, right? From sort of there was the .com bubble where everyone was freaking out. I remember when we were there, it was like, oh, Y2K, if you remember that, dropping over from 1999 to 2000, and it was the computers, they're going to be all zeros and it's going to dysfunction, And there was a bit of a period there where there was a lot of fear, and obviously 2001 was a pretty dramatic event in the world where 9/11 happened. But like from that, it was 7 years that was of this prosperous time, right? So I'm working backwards from the 18 years down, right? So that 7 years from basically 2001 to 2007 was just crazy. Property prices went through the roof.
Mm-hmm.
And I was doing valuations back in my time, like 2012, of what valuers were putting on these properties in year 2009s, and you could see the mania. Like it was still in the market in 2009, even though everyone knew that the banks were failing over in America. But we just thought because we had the commodities cycle here in Australia, we weren't really affected. But most people just didn't see it coming, right?
Yeah. We do have a pretty strong economy, but at the same time, like if you look under, like we do get pretty close to some gnarly stuff happening within our economy.
Yeah, but it's always this is like the cycle theory, right? Like there's always a reason not to invest or not to buy a property, but then that's the analysis paralysis. So what I've been trying to do for the last 2 years is just more understand how this system works, and it's not an exact science or art or anything like that. It's just trying to look back on history and allow that to dictate what your thought processes are, because it never repeats, but it tends to rhyme from the research that I've been doing.
Yeah.
And going back from that historical timeline, like before, like we had the late 80s, there was a recession, in our time frame. Like you think about it, like everyone talks about, back in my day, interest rates were like 17.5%, and they were just gnarly, and that was the kicker into that 4-year down cycle back in the late 80s.
Mm-hmm.
And that 4 years started to end in those early 90 periods. So that's how you had that initial 7 years kicker. 6 years into the late 90s, it was performing really well. There was a lot of money coming through from your Asian markets, like the Japanese market they were just printing money, and they were just buying everything. It was really kind of interesting to see the history there. And then we had that kicker, and then it was, the world's ending again. You had that, Y2K, 2000, 2001 pullback, and then most people, they had that fear going, all right, well, that was 1 year down, and then it went into another 6 to 7 year growth kicker. And this is the psyche, and we're entering into something like this in the foreseeable future over the next 5 or 6 years. but people like with COVID, the mid-year cycle for us here was in that 2019, 2020 COVID period where
It's a bit of a hiccup.
it pulled back, and everyone thought the world was going to end, locking down, and then it boosted again. So my fear for most people coming into this next phase of the cycle is that they're going to think it's going to be a 1 year, downturn period, but it's going to end up being a multi-year downturn period, and they're going to get caught out, and they're going to be those ones that are catching that falling knife. And the biggest thing is that there's still opportunities in each market to be making money. I mean, there's locations in Australia that were going up in value during that 2008 to 2012 period because the underlying fundamentals of that regional location was prosperous.
Yeah, strong.
Does that make sense?
Yeah, they might have different government infrastructures and stuff being built, and then even private infrastructures in terms of shopping centres that bring more people to maybe a better place to live at that time in the world. So it's like we're not here to fear, to put out fear of like you need to really. It is worth understanding the market cycle. But like through that 4-year downturn doesn't mean like you just sit and do nothing. Like there's things that you can do. So I still want to get this whole cycle wrapped up. So we've got from going backwards from 2012 to 2008, we had that 4-year downturn. And then from basically 1999, 2000 to 2008, we had that 7 to 8 year sort of uptrend. And what happened before that, so you had that little that .com bubble thing. I remember at 12 o'clock at midnight and the year 2000 started. It was, the world, computers are going to take over and stuff like that. We were pretty young, right? I remember that being, said from our parents and stuff. So I can't remember how old I was. It must have been 12 or something. But
we graduated. The age, mate. We were.
We 05 we graduated. Yeah. So we're in year 7. Yeah, exactly. So, then you've got that little hiccup, but before that little hiccup and the 7-year upturn to the GFC, what happened before that? Right. So you've got your 4 years and then your 8 years. Obviously,
so generally go
12 years.
4 year, from the very start, you'll get that. So you work from the bottom, right? It goes 6 to 7 years up.
Yep.
1 year down, 6 7 years up, 4 years down.
Okay, cool. So you've got that before the .com millennial thing. You had 6 7 years of growth, little hiccup for a year, and then another 7 years of growth, and then 4 years downturn. So that's the full property cycle.